Industrials is going to pitch Ecolab, so we're going to hand it over to them in a minute. Just want to talk about a few things. First, there are 2 different sustainability finance courses being taught next semester. So, for undergrad students, there is one Thursday night, I believe, as a night bomb being taught, and that aligns very closely with the club. We highly encourage everyone to try and take that, especially if you're interested in ESG and investing. And that could just count as a finance elective or go towards, I believe it goes towards sustainability minor as well. And then there's also a graduate course being taught. So I know, like, for some of the seniors, you may be able to take like 1 or 2 grad classes now. So there is one being taught actually by the director of ESG strategy at John Hancock, and I think it might be Tuesday night at 7:30 next semester. So if anyone's interested in those, like, definitely sign up. I know, like, registration's coming up soon. That's first announcement. Second announcement, there's been a lot of, like, mergers and acquisitions lately that have been really interesting. So I don't know if you've seen this, but Morgan Stanley acquired Eaton Vance, which also means that they acquired Calvert. So, big companies are really trying to get more in terms of their ESG integration. I know FactSet acquired TrueLab. So, like, it's been happening honestly at like a weekly rate at this point. You've been seeing, like, major corporations acquiring ESG platforms or really good companies with mutual funds, ESG related, or ETFs or other things like that. So it's been great to see. So the other thing that we want to talk about is our online panel discussion that we're hosting next week. So in lieu of having this meeting during 2 o'clock, we're going to cancel it, and we're going to encourage everyone to try and make it to the panel discussion. And I'm actually going to hand it over to Haley to kind of talk a little bit more about it.
Okay, can you hear me now?
Yeah.
Okay, sorry, my internet is incredibly slow.
Yeah, no worries.
Behind. Awesome. So we have been working with some professionals in the industry to put together a panel full of people that will be able to talk to on different levels, the kind of the impact they have. And we're hoping to kind of offer this up to the general body first. We do have a limited number of registration, like, for our webinar. So we only can have like up to 100 people register, and because of, like, the names, we have people from Bain and Company, some people in strategic M&A, so we'll have people in private equity, kind of across the board, Lewis sales, fixed income, but all of these people will be able to kind of talk to impact, ESG, either whether it's an ESG focus, or maybe they've worked, like the woman from Lewis Sales is the co-founder of their Mosaic it's just Mosaic. It's their multicultural organization within their company to help support diversity within them. So this should be a really, really great panel. I'm super excited. All the panelists are very excited to come talk to us. So highly recommend you guys register as soon as possible, just because we do expect this to be very popular, and also is going to be kind of shared with the entire school. So just be wary that you should probably sign up as soon as possible for this. It'll be next Tuesday at 7 p.m.
Awesome. Great. Thank you. So those are really all of our major announcements for this week. So, one thing I guess to look forward to is, so Haley made this, like, really fun Kahoot about, like, sustainable trivia. So we ended up not really hosting it. So what we're going to do now is the start of all of the meetings. You might have, like, a few questions and kind of just, like, make it more interactive, and they're just fun, and they're about sustainability, like the fast fashion industry, or like some surprising facts about climate change, or like things like that. So starting not next week because we have this panel discussion, but the following week we'll be starting off meetings with that. So fun little thing. But yeah, I'm just gonna stop screen sharing and hand it over to Victor and Emily to do their pitch.
Do you guys see that? Hello, everyone, and welcome to the materials and industrial sector. I'm Emily. I'm a senior here at Bentley, and I've worked alongside Victor. Go ahead and introduce himself, but we'll be pitching today Ecolab. So here's our table of contents. Moving into it, the investment thesis. Ecolab is an industry leader in the specialty chemicals industry with a heavy focus on ESG and is well positioned to use the growth in ESG to their advantage. Sorry. With a focus on water treatment and specialized cleaning and sanitizing, we believe that Ecolab will continue to grow their higher demand for their products in the wake of the pandemic. And we recommend to buy it at $88.5 per share. Moving into ESG factors, Ecolab has a strong focus on operating safely and sustainably. They have a diverse and inclusive workforce, and it's critical to their success, as you'll hear about later. And then Ecolab abides by a strict code of conduct that guides daily actions. Catalysts include they're an industry leader, Ecolab's science certified program. It'll be spoken about in a bit too. Their active merger and acquisition strategy. Since 2010, they've actually acquired 70 companies using their size to expand products and customer base. They've partnered with the United Nations Sustainable Development Goals, specifically for 5, 6, and 13, and they have had promising post-COVID-19 growth for what's been going on through the industry. So risks include currency valuations and devaluations, changes in the availability and pricing of raw materials, energy, and utilities, changes in local economic conditions, and then, of course, the pandemic, COVID-19 hitting their main business. So next we have the company overview. Thank you. They were founded in 1923 and headquartered in St. Paul, Minnesota. They're a global leader in water, hygiene, and energy technologies and services that protect people and vital resources. So with annual sales of $13 billion and more than 45,000 associates, Ecolab delivers comprehensive solutions, data-driven insights, and personalized services to advance food safety, maintain clean and safe environments, optimize water and energy use, and improve operational efficiencies and sustainability for customers in the food, healthcare, hospitality, and industrial markets. They work in more than 170 countries around the world. So they're led by CEO Douglas M. Baker. He's been the CEO since 2004 and was a graduate of the College of the Holy Cross here in Massachusetts. So since his leadership, and he'll also be retiring on January 1st, 2021, their COO, Christopher Beck, will be taking over. Some ESG efforts under Douglas Baker's lead. Of the 12 board of directors, 8 of the members additionally focus on governance, safety, health, and the environment. So that's great. So moving a little bit more specifically, just what they've done last year. They saved 206 billion gallons of water, conserved 28 trillion BTUs of energy, prevented more than 1 million foodborne illnesses, produced 45% of the global processed milk, generated 20% of the world's power, made 16% of the world's processed foods safe, cleaned over 1 billion hotel rooms, served 45 billion meals, cleaned 40 billion hands, and reduced 3.3 billion pounds of greenhouse gas emissions. And then Victor will tell you about the industry outlook.
Hey guys, my name is Victor, and I'm a first-year master's student at Bentley, and together with Emily, I've worked on this presentation, and now we're going to go into look at the industry. So Ecolab has a very wide variety of products. Their main industry is specialty chemicals. So within that industry, they produce cleaning products, a lot of chemicals that is used for sanitation and stuff like that. But they have a really, really broad product base and serve a lot of different industries. So what we see here is a chart from FactSet, and it shows that the industry is expecting an increase to higher sales levels than pre-pandemic, which is we see as a positive. Looking at the industry trends, not surprisingly, technology and AI is playing a big role in this industry and how it evolves. Waste and hazardous chemicals management, workplace wellness and sustainability programs. I'll talk a little bit about that later. Water treatment is something Ecolab is very active in. So Ecolab is working towards improving water scarcity and treatment in the industrials industry in general. They recognize businesses' insufficient use of water and the bad water stewardship. So they've done a couple of things to combat this. One of the things is that they, together with Trucos and Microsoft, developed a pretty interesting financial modeling tool that provides a new way for businesses to kind of factor in the water use and the water scarcity in their business growth and their business strategy. So this just informs or aims to inform companies about the the disconnection between the market price of water and the risk with bad water stewardship. It's a first of a kind, publicly available financial modeling tool that anyone can use. It's used to reduce water costs and a lot of other different things. So other than that, they've also developed something called Smart Water Navigator, which is used to protect facilities and ensure continued growth in the water, in businesses' water treatments. Also, within the water treatment segment, they acquired Nalco Water in 2011, their biggest acquisition ever. I think it was 5.5 billion. So Nalco Water is now one of the leading water treatment companies in the world, and they work as a subsidiary of Ecolab. Yeah, so also in regards to workplace wellness and sustainability programs, that's something we really believe Ecolab is well prepared for post-pandemic. We think that a lot of companies are, looking to, better their safety at work. Healthy buildings equals healthy people. That's kind of a new way of thinking. Their goal is to keep facilities cleaner, healthier, and greener and safer, and that's where Ecolab has a really big market advantage because of their size and experience. Moving on, a couple of risks. We'll look at global chemical safety regulations and political risks. So Ecolab derives 77% of its revenue from markets and such as the US, Canada, Europe. It's a very global company, and therefore it's really exposed to regulatory risks and potential reformulation costs. But to mitigate those risks, the company has a really, really strong chemical safety management system. So they work with dangerous chemicals, but they have a really good management system that helps them mitigate those risks. And this program includes plans to phase out chemicals of high concern. And MSCI says, according to MSCI, this is a practice displayed by only 7.5% of the companies in the MSCI constitutes or in the special chemicals sub-industry. So that's something they do to mitigate that risk, and then changes in the availability and pricing of raw materials, energy, and utilities, and also currency risk. That's the problem that a lot of global companies face in general. It's nothing really specific to Ecolab, but they mitigate those risks by entering derivatives. Nothing crazy. A lot of companies do that. They also sign a lot of multi-year contracts with customers to get a fixed price. They're very innovative, which we'll also get to later. So ESG influence increased demand for sanitizing and cleaning products post-COVID. Talked a little bit about that before, but we and they believe that there's going to be a significant increase in demand after COVID. Something else they do to mitigate this is that they're extremely transparent. In the quarterly reports, you can find whatever program they have, you can find their progress, how it's going for them. So that's really a good way for us as investors to follow along with their progress. A little bit more about their plans in the industry. So they have a continued long-term opportunities. Kind of what I touched on, that they're very optimistic about the post-COVID business. They think that businesses are going to change the way they look at cleaning and sanitizing and so on. And as we can see here to the right on this graph, they're very optimistic about the food service, healthcare, and food and beverage industry. They operate in so many industries, but food service, they operate in a lot of restaurants, and a lot of restaurants right now are looking to improve their cleanliness, and so is healthcare, and so is, you know, heavy industry. And sales last year were 13 billion, as you can see, in comparison to the competitors, they're very dominant, which is one of the reasons why they have performed pretty good during the pandemic, but also are looking at a very strong financial position coming out of it. I want to talk about a little bit about the Ecolab Science Certified program. It's a program that they designed as a response to COVID-19. It's a program that includes a comprehensive public health and food safety program to any company that is looking to improve their cleanliness protocols and food safety. It's guided by experts that have comprehensive knowledge in the area, and just recently they got a new sink and surface cleaner approved by the CDC to be the fastest COVID-19 remover, or however you want to put it so far. ESG integration.
So regulations mostly involve specialty cleaning products. Ecolab works hard to achieve their carbon reduction targets and have a track record of successfully doing so. They also have clear targets and descriptions and high transparency on this. They have a 7.5 rating in carbon emissions performance in comparison to their competitors. And then they have a higher concern in the area of chemical safety than the industry average, but they also do a better risk management assessment compared to their peers. Some third-party data, their Bloomberg score is 64, and it's been increasing for the last 7 years. More specifically, they rank better than their peers in certain categories of women employees, greenhouse gases, and women on the board. Their SCI rating is AAA. They were ranked top 10 on corporate responsibility, best corporate citizens list. Ecolab was named to Bloomberg Gender Equality Index, Forbes Best Employees for Women 2019, and Forbes Best Employer for Diversity in 2019.
Yeah, so talking a little bit about the SDG goals integration, Ecolab is heavily invested in working with the UN to meet their goals and also Ecolab's own goals. So they partnered with the UN Global Compact Business Ambition for 1.5 degrees Celsius and reduce carbon emissions by half in 2030 and net zero by 2050. I'm sure a lot of you have heard about that. So for the number 5, gender equality, Ecolab is working to increase management level gender diversity to 35%. I believe they've reached that now. They also have a high level of ethnical and racial diversity, looking at 25%. So they're very heavily invested in that. Like I said before, they're very invested in the water and sanitation. So their number 6 goal, UN SDG goal, is something Ecolab is focusing hard on. They're working towards improving water scarcity and treatment in the industrials industry. like I said before, they're recognizing businesses insufficient use of water. Moving on to number 13, climate action. Expand energy efficient projects at Ecolab sites. Move to electrify its fleet. I would really recommend, so in our Teams folder, we have Ecolab as a comprehensive report where they talk about those goals. I think it's like 90 pages, so you can find under the pitch. I'm not going to go into too much to this, but moving on, we're looking at some MSCI highlights. Pretty boring charts, but very important and something we found really useful. Ecolab is an industry leader, like we said, in the toxic emission and waste, which is basically a graph that evaluates to which extent a company may face liabilities associated with pollution, contamination, and so on. So the scores on that chart is based on their operations in generating toxic byproducts and so on. Water stress, evaluates to which extent the company may face water shortages, and like I said before, they're working really hard to be a leader there. So they're doing well in these areas. And here are just some awards and recognitions. One of the most ethical companies in the world, best employer for women. They have a lot of different awards, and that's something they take a lot of pride in. The company bases, like they're based out of their ESG, and that's where they market themselves at. I mean, if you go to the website, you see almost everything is sustainable, ESG. Yeah.
So Ecolab's safe and sustainable operations has helped the company's innovation, helping customers meet environmental and social challenges, also reflected in its own operations. Through resource efficiency, Ecolab has reduced 25% of water usage and reduced 10% greenhouse gas emissions. Ecolab focuses on environmental safety through its zero release goal, ISO environmental certification at 60% of its facilities, and by product and raw material compliance. We also want to highlight Ecolab's focus on governance of environmental and social performance through its Board of Safety, Health, and Environmental Committee. Their membership in the United Nations Global Compact for Human Rights Group, commitment to the United Nations Sustainable Development Goals, and commitment to the United Nations Global Ambition Group.
So let's talk a little bit about the valuation part. Like I mentioned before, they're operating in a lot of different industries, so it was kind of challenging to find good comps since they have products that compete with a lot of different companies in different industries. But here's the one I found. Nothing crazy. I mean, they trade at 22 times their EBITDA, which is pretty high. Their PE is 44.8, which is significantly higher than the average. But we also see that there's two companies with negative earnings, which puts down the average a little bit. But definitely trading at high multiples at the moment. Some key assumptions for the WACC. We found a lot of different numbers. I think last year was 7%. Looking at Bloomberg this year was, for the WACC total, that is, I think it was 9.3%. And then FactSet had like 5.5 or something. I took an average of that. So coming up with 8.22% for the WACC. Like I said before, 22.6 times EBITDA. We used a perpetual growth rate of 3%. We thought that was, pretty conservative, commonly used. And then as a key driver, obviously revenue growth. This year, we're looking at probably 15 to 20% negative. and then we used 5% in perpetuity. It's not high, it's not low. We felt that that was the right, Ecolab is a well-established company. It's not a fast-growing. It's more of a long-term winner, and they're gonna recover well from this pandemic. So coming to the DCF, we end up at an equity value of 205.12. We feel like that's very obtainable, very realistic. I think their 52-week high was 232, so they recently dropped a lot in price, which I believe is good for us. We have a target upside within a year of 9%. Yeah, don't really have much else to say about this, but they have a really strong balance sheet, and I think that's something they take advantage of. So for our targets, our base case is 205.12, which is a 9% upside. So that is under the assumption that Ecolab will come out of the pandemic with a greater demand for their cleaning and sanitizing products, as well as continuing to expand their market share through mergers and acquisitions. The bull case is that we're looking at maybe double the revenue growth coming out of the pandemic, and everything goes well for Ecolab, and the way businesses operate are dependent on cleanliness, and it will generate double the projected revenue, and that is 247 with a 30% upside, 31%. Our bear case is that Ecolab will be recovering slower than we project, and will take a longer time to bounce back. So the bear case is 165, which is a 12% downside.
So to conclude, we strongly believe that Ecolab is well suited for our portfolio. The company has a comprehensive environmental strategy and is well positioned to maintain its competitive advantages and industry-leading position through improved product focus, innovation, and strategic acquisitions.
Any questions?
I just had one. In terms of because I see that they're the second biggest company out of their competitors. I'm just looking at you guys' model, or at least the one that's on Teams right now. I just wanted to ask, what are the company's main costs? I don't know if I might have missed it. There was one point where the presentation kind of cut off the audio, at least on my end. So what are the company's main costs? Because I see that because of how big they are, their sales are a little bit they're a little bit lower than what I was expecting, but their EBITDA is certainly very high. But I just want to know what their main costs are.
Could you repeat that? You were cutting off a little bit.
Oh, can you hear me now?
Yeah, I can hear you, just coming out in and out a little bit.
Yes, so I just wanted to know, because also the audio actually cut off on my end as well while you were going through your presentation. I just want to know, what are the main costs for the company? Are they mainly R&D expenditures, things of that nature? Is it mostly because of the acquisitions that they make on a more active or on a more constant basis?
So they spend a lot of money in R&D because they're working with chemicals. They're always looking to find new products that are, cleaner. As they work a lot with ESG, they put a lot of money into developing products that are greener, and it sometimes costs a little bit more, I believe. And also, like you said, they're a very active M&A company, which is also taking a lot from that. And then the last year, I don't know what year you were looking at, but they were really hit hard from this shutdown in restaurants and stuff, especially the hospitality businesses, because they don't operate, so they don't really need their services. But on the other hand, that's where we see Ecolab coming in post-pandemic to recover from that, is that people are, or businesses are gonna want more clean environment. So I guess that's my answer.
Thank you.
They also have a lot of costs right now in discontinued operations because they try to cut off less profitable operations, and I believe that's pretty expensive in the short term.
Yeah, and then just one last thing. I see. I'm also seeing the same model that I'm looking at. And it was also on one of your last slides. If their sales have been mostly around 5%, what do you see kind of like the main driver the year after the pandemic ends? That essentially tells you that they're gonna have kind of like 5% going into basically from 2021 to 2025.
Yeah, I think that's kind of going back to what I was talking about, is that their sales are, it's broken down by 4 business segments, right? They have the global energy, global industrial. So I think the global industrial is really going to push their sales because of what we've been talking about, is that, businesses are really going to want to make sure they're on top of the cleanliness, keeping everything sanitized. And, their sales growth before the pandemic was solid. Like we said, it's not going to be a crazy growing company. It's going to linger around 3-5%, but we really think they're going to bounce back hard because of the need for their products after the pandemic.
You,
So in terms of like the impact of COVID, I know that like they obviously kind of had a lot of like synergies from this, and it's been really helpful for them with all the chemicals and the hand sanitization. Like I see every time I go out in a restaurant, it's always like Ecolab is there. So if for some reason, COVID ended up resolving itself in the near future and it like wasn't as big of a deal and there wasn't the need for all of this like sanitization and chemicals, like how would that affect them? Or like how'd you guys go about thinking about that?
Yeah, that's a good question. I think they have pre-pandemic, they just have they're such a large company with such a broad product base. We see the pandemic as an opportunity, but they're not dependent on it, if that makes sense. So they still have like a solid product base and a customer base. We just see the pandemic as an upside. There's obviously this downside, like you're talking about, with where the pandemic is not resulting in what we want from an Ecolab standpoint. But I think they're such a large established company that they'll be fine.
Awesome. Well, if no one else has any other questions, thank you guys, did an awesome job. And yeah, that's all we have for today. So thanks
Awesome.
again.
Thank you, guys.
Take care. Bye.
thank you.